So what's a compelling investment? Well, we live in uncertainty. We invest in uncertainty. So a compelling investment is one that's very likely to provide a very good return, but that's all we can say. So to get that very likely, very good return, we need to swing the odds in our favour as much as possible. We do that in the first instance by falling back on the recurring business situations and patterns of behaviour. But beyond that, we look for certain attributes within the companies that we invest in. The first is G for growth. We want to see step changes in the prospects of the business so that we can predict what's going to happen in the future to their earnings, their revenues, their balance sheet. We're looking for I, insight. Why do we think that? What are we falling back on to predict that? Why do we think this company is misunderstood, and how is that going to be resolved? We don't want to be like the guy at the poker table who doesn't know who the bunny is. Then V for value. That's the payoff we're looking for. When we do our DCF, what do we think the valuation of the company should be if other people valued the way we think the company should be valued given the future that we expect for that business, again, when it comes to its revenues, its earnings, and its balance sheet. And finally, E for event. What do we expect to happen going forward? What signposts are we looking for that we can tick off along the way to know that we're on track? So that's a mnemonic, G-I-V-E, give. And that's how we find ourselves compelling investments.